2025. Economic growth in the U.S. under Trump, driven by oil, gas, and financial market expansion. With Donald Trump back in office, 2025 stands out as a promising year for the U.S. economy, guided by an agenda focused on oil and gas incentives, industrial strengthening, and a leaner public sector. This new scenario is already impacting the financial market, which is anticipating growth opportunities, favoring the stocks of companies directly benefiting from these changes. The role of the financial market in anticipating change. Trump's vision of economic growth has generated enthusiasm in the financial markets. Wall Street has reacted positively to the announced policies, predicting expansion in the energy, industry, construction, and service sectors. Investors are redirecting capital to companies at the forefront of oil, gas, and manufacturing exploration, while asset managers and banks are revising their forecasts to capture the potential of this growth. Energy companies, for instance, are seeing their stock prices rise as the market anticipates profits from new exploration licenses and government incentives. Major players like ExxonMobil, Chevron, and ConocoPhillips are among the biggest beneficiaries, with expectations for increased production and infrastructure expansion, resulting in more consistent profits and greater market value. Oil and gas sector. Growth potential and new opportunities. With government support for oil and gas, large corporations, as well as mid-sized energy-focused companies, are expected to gain new momentum. Beyond the traditional energy giants, there is room for the growth of smaller, specialized companies that provide drilling technology, equipment, and logistical services to the sector. The oil and gas infrastructure is also expected to expand, with investments in new refineries, pipelines, and gas networks. Infrastructure companies like Kinder Morgan and drilling service companies like Halliburton and Schlumberger are among those most prepared to take advantage of this growth. The result is a scenario projecting greater cash flow and market expansion, attracting investors seeking stability and return. Industrial expansion and benefits for the capital markets. The return of investments to American industry, driven by repatriation policies and tax incentives, creates an environment of opportunity for manufacturing and construction companies. Corporations like General Electric and Caterpillar, which supply equipment and technology to heavy industry and construction, are preparing for significant growth. Local production is also expanding into sectors such as electronics manufacturing and automotive, positively impacting companies like Ford, which should increase domestic production with lower tax costs. Additionally, infrastructure, construction materials, and engineering firms are benefiting from the demand for new energy projects and industrial facility upgrades. Stocks of companies like Nucor and U.S. Steel, manufacturers of steel and construction materials, are expected to rise in value, following the growth in demand for industrial products. Financial sector, capitalization and credit expansion. The financial sector is moving to capitalize on the growth of these sectors, with banks and financial institutions anticipating greater demand for corporate credit and financing for large infrastructure and energy projects. Banks such as J.P. Morgan Chase, Bank of America, and Wells Fargo have already started adjusting their strategies to offer credit packages to oil, gas, and manufacturing companies, expecting to capture a significant market share. Additionally, investment funds focused on energy and infrastructure are likely to attract new investors, offering opportunities for high returns and security in tangible assets. Private equity and venture capital firms are watching the energy sector with renewed interest, identifying opportunities to finance emerging technologies and innovative solutions in logistics and production. Tax reduction and government efficiency. With Trump's promise to reduce taxes and streamline the public sector, companies and investors are optimistic about lower operational costs and regulatory simplification. Medium-sized companies in sectors such as technology and consumer goods directly benefit from these measures, with more capital available for investment and less bureaucracy, making operations more profitable. The reduction in public sector costs also brings confidence to the markets. With fewer resources directed towards government spending, the government can maintain a more balanced fiscal stance, reducing the deficit and encouraging greater private sector participation. This change reinforces the cycle of confidence in the financial sector, increasing liquidity and attracting external investors to the American economy. International trade and export competitiveness. Trump's protectionist trade policy, coupled with the strengthening of the energy and industrial sectors, is expected to positively impact American competitiveness in the global market. With government support, Made in USA gains strength, increasing export volumes and generating a positive balance in trade. Export-oriented companies such as Boeing and Johnson & Johnson could benefit from a greater global presence. By increasing domestic production and reducing dependence on imports, the U.S. gains a competitive advantage, especially in sectors where it already has a high production capacity and efficiency. For the financial market, this represents stability and expansion of export assets, increasing economic resilience in the face of global crises. Conclusion. In 2025, Donald Trump's return to the presidency marks a new era of economic prosperity in the United States, driven by the strengthening of the oil and gas sector, industrial incentive policies, and reduced public sector costs. The financial market, always attuned to change, already envisions investment opportunities in strategic sectors and projects robust growth in stocks of companies related to energy, infrastructure, and manufacturing. This growth scenario will directly benefit companies and investors, solidifying the United States as a self-sufficient and resilient economic powerhouse. With lower taxes, a more efficient public sector, and a strengthened private sector, the U.S. is ready to lead a new cycle of economic prosperity and global competitiveness.